As I spoke about yesterday, Tesla stock's sell-off was likely nearing the end. And at least, well, so far, so good today. You're up 5%. And, I mean, this was kind of to be expected, at least relatively soon. And, yeah, it just happened to be the next day. So, yeah, for everyone that was panicking, well, seems like there's a fair bit of chasing that is now going on today. Here in this video, I will explain what happened, why Tesla stock is up 5% today, even though we had hotter than expected inflation. Like, some really bad inflation numbers, if you know, we want to acknowledge that. That is not a good situation. So I will share with you everything you need to know here in this video. Hit that like button as well as subscribe to the channel if you have not done so already. There is a lot we need to cover, so we are going to go ahead and jump straight into it. First and foremost, there is a couple of reasons why Tesla stock is bouncing today. First and foremost, I mean, you were hitting oversold levels on the RSI, as I talked about yesterday. Basically, every time you hit oversold on the RSI, Tesla bounces. Outside of, you know, catastrophes like Elon selling a bunch of Tesla stock to buy Twitter. And again, 2022 was not a great year for Tesla fundamentally, okay? It wasn't just Elon selling stock that caused that drop. It was a whole multitude of different factors. And basically ever since then, or outside of, you know, COVID and that moment in late 2022, you pretty much bounce every time you get to 30 on the RSI. Or pretty close thereafter. Sometimes you get to like 27 or so. So, yeah, we've been due for a bounce now for a while, but you did technically hit that bounce level yesterday, and that's part of the reason why Tesla is indeed bouncing today, and it's has nothing to do with inflation. Among the good news today for Tesla, Tesla has received a buy rating and a $475 per share price target from Benchmark, touting autonomous vehicles, robotics, and energy generation and storage as potential growth drivers in addition to further EV market penetration. Quote, "The company has outlined a path for growth with a more affordable vehicle scheduled for the first half of 2025, unsupervised full self-driving as a paid service this June in Austin, Texas, and Optimus robot production ramp through 2026 and beyond." Analyst Mikey Legg writes in a note to clients, says his model only incorporates vehicle growth, so there could be significant potential upside should autonomous vehicles and Optimus, Tesla's humanoid robot, achieve scale. So he's basically saying $475 is not even necessarily pricing in Robotaxi or Optimus at scale, which, you know, what would the numbers look like if you incorporate those two future segments of Tesla's business at scale? I mean, way higher than 475, I'll tell you that. Tesla Europe and their Middle East X account says 0 to 100,000 Teslas on the road in 11 years and 100,000 to 150,000 in just over 24 months. Canada has started issuing discounts on the Foundation Series Cybertruck in Canada, with prices dropping on both variants by 5%. This is the first time Tesla has lowered the price of the Foundation Series Cybertruck in Canada. They recently raised the Cybertruck's pricing, so pulling that back a little bit. And here we can see Tesla's Hollywood diner that continues to be in construction phase, but it is starting to look more and more finished from an outside perspective. We can also see from Joe Tetmeyer today that there is new refreshed Model Ys coming out of Giga Texas, and this could also have investors in Tesla stock quite excited. I mean, there's what looks like a couple hundred of them sitting in outbound parking lots. And as Joe Tetmeyer points out, there is a Model Y that is still camoed front to back and camoed inside as well. So you can't see what the inside also looks like, making some people wonder, what is this? And a group of U.S. Republican senators today proposed a one-time $1,000 tax on new electric vehicle purchases to, quote, account for the cost of federal road repairs. And it is official, Toronto City Council has just approved the motion by Mayor Olivia Chow to exclude Tesla vehicles from the city's zero-emission grant program. Effective March 1st, new Tesla vehicles will no longer qualify, a politically motivated move aimed at targeting Elon Musk and Trump. But this is really not going to do much for Tesla. It's nothing you need to be concerned with if you are a Tesla stock investor. Inflation today was really the big catalyst as far as data, and the numbers were not good. Core month over month came in at 0.4%. We were expecting 0.3%, so higher than expected. Last month was 0.2%. Core year over year came in at 3.3%. We were actually expecting this to fall from 3.2% down to 3.1%. Now, headline inflation month over month came in at 0.5% versus a forecasted 0.3%. That was expected to be a fall on a month over month basis from 0.4% down to 0.3%. Did not happen. And year over year headline came in at 3%. We were expecting that number to hold steady at 2.9%. So across the board, worse than expected inflation. I mean, markets are actually doing a pretty good job, holding up. It's not a disaster in markets today by any means, but that was definitely not great. Now, Jerome Powell did testify in front of the Senate again, in which some of the comments that he made could be a reason why markets are doing okay today. I'm not going to say they're great by any means. You have winners and losers in different areas, but they're not a disaster. One of the things that Powell specifically said was, PCE is what the Fed cares about. So he kind of shrugged off the CPI report, and he again said that the Fed doesn't get excited, quote unquote, by one data report, that, they don't draw conclusions or change much based on one data report. And you really need to see a string of data reports for the Fed to start reacting to something. So Wall Street's saying, hey, if this is just the kind of seasonal jump in inflation we get in January, that's fine. If the next couple of months come down again, then we're kind of, back to making progress on inflation, because there normally is a spike in inflation during any normal year in January as companies kind of do their one-time price increases, seasonal adjustments come in. You do tend to get a rise in inflation, but it still was more than Wall Street was expecting by and large. And Jerome Powell says that we are looking for PPI data tomorrow for a read-through to PCE. Jerome Powell again points out for investors and for the Senate that even though CPI was high today, they care about PCE, and PPI is going to be important for their PCE calculations, that they'll basically know what PCE is going to look like next week based on PPI tomorrow. So PPI could be a important catalyst tomorrow morning. Jerome Powell yet again says we are holding rates where they are, awaiting further evidence of inflation coming down. Just moments before the CPI report came out this morning, President Trump says that interest rates will lower with his upcoming tariffs. He says interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll, America. And traders have shifted their next Fed rate cut to December from September. So continuing to delay the next Fed rate cut, which is good in one aspect because that means the economy is doing okay, or at least expecting the economy is doing okay. But again, not really great for easing a Fed policy. House Republicans proposed a $4 trillion debt limit increase today. And Jerome Powell says we are close but not there yet on inflation. And Jerome Powell says in hindsight, we probably could have halted QE earlier. U.S. tariffs on aluminum and steel will cause job losses in the United States, says Canada's Prime Minister Trudeau. European Union's trade chief talks to the Trump team on finding a tariff solution. And the Trump economic advisor, Hassett, says reciprocal tariffs are a work in progress. Conversations with other countries began earlier on Wednesday. And apparently, reciprocal tariffs will come before Modi's visit to the U.S. The White House press secretary Leavitt speaks at the briefing today. U.S. House Republicans propose a $4.5 trillion tax cut. U.S. House Republicans propose $2 trillion in cuts to mandatory spending over 10 years. And also in the news today, Apple is exploring both humanoid and non-humanoid robots for its future smart home ecosystem. And Trump today confirms that he had a call with Putin Wednesday morning discussing Ukraine, the Middle East, energy, AI, and the US dollar, with both presidents agreeing to visit each other's countries. Trump to visit Russia and Putin to visit the US. Fed Goolsbee says today, if we got multiple months like this on CPI inflation, then the job is clearly not done. And Goolsbee still forecast rates settling a fair bit below where they are today. And I think this is part of why the markets did not have a super bad day today. This is not like a disaster kind of a day, even though the CPI report was kind of a disaster, because the Fed's really just shrugging this off. Again, as I mentioned earlier, January does have some weird inflationary effects every year. That's number one. But number two, the Fed's not going to react, or nothing's really going to change based on just one CPI report. So that's kind of the reason why Tesla was not held back today by CPI, or not, doesn't appear like it was held back. The RSP is down 0.62%. There's definitely some pressures out there, but it's not as bad of a day as we would have thought if I told you last night core month over month was going to come in at 0.4%. I mean, yeah, you would expect the NASDAQ, S&P probably be down 1 to 2% at least, and that's not happening. And yeah, Trump's reciprocal tariffs could come by Thursday. That is when Modi is going to be visiting the White House, so that is technically by tomorrow. Now, you can also see the Russell 2000 underperforming, of course, that is to be expected, down 0.80%. NASDAQ slightly green today. S&P is down 1/3%. The Dow is down about 0.5%. And you can see the VIX is down about 1% as well. So some fear is actually being lifted off of markets. So I think that's pretty interesting. 10-year Treasury yields are in fact reacting negatively today. They are up about 9 basis points, almost 9.5 basis points to 4.63%. So definitely some pressure on the bond market, which again, when CPI comes in this hot, you would expect to see that. But I would say overall, it's probably a good sign that markets are not full-blown crashing today on hotter than expected CPI. We can kind of look through some of these issues, at least for now. Now, ultimately, if we can continue to look through those issues, really depends on if, inflation continues to spike. But so far, it doesn't seem to be a big negative catalyst. Option activity today for Tesla is, well, as you would expect it to be. We've seen in the last couple of weeks, option activity for Tesla has been actually very bullish. Yesterday was the first day it was kind of neutral overall, slightly bearish, but every other day has been pretty damn positive for Tesla, including today. You have 531 different trades totaling $502 million with a positive order value of 79%. That to me doesn't seem like a super concerned, hedge fund institutional investor base, right? That seems like a big money investor base that is actually taking advantage of the dip that we have seen in Tesla stock and adding to their positions. Now, if we take a look at the volume for today's date, for this Friday's expiration, 2 days away, you can see volume today, 62.44% calls and 37.56% puts. Pretty good numbers. Next week numbers look even better. You got volume of 65.76% to the call side and 34.24% to the put side. So overall, I mean, it looks good here on the day today. You can also see short interest continues to fall in Tesla. About 4 million shares have been covered on, at least here in the last week or so, as Tesla stock has been falling. You now have only 2.13% short interest of free float. Now, as Tesla stock has fallen, you're seeing short sellers covering. Okay, that's not what you see happen on bad companies. On bad companies, they don't cover when the stock falls, right? They want to continue to be in those short positions. You are seeing hedge funds and institutions that want to not be exposed to a potential rally in Tesla, right? A potential rebound in Tesla. Meaning, just the simplest way to put this without confusing anyone, hedge funds and institutions, even the ones that were short in Tesla, are covering now. They're covering on their positions in the 300s because, again, you could easily see the stock bounce back into the 400s. And last thing you want is a theoretical winning position, if you are shorting Tesla in the last 30% drop we have seen, to become a losing position over the next couple of months. So it's really remarkable to see the short interest fall to really multi-year lows. We haven't been at 2.13% short interest of free float in a very long time for Tesla. And I'll actually go ahead and go look at the last time we were, this low on the short interest. And yeah, I mean, you literally like can't find any time we were lower than this. Like, there's just not. I mean, this is the lowest you have been ever in Tesla's history for short interest. There's a couple moments, obviously, you've been in the low twos as well, but 2.13% is the lowest number in Tesla's entire history. That is kind of mind-blowing because I didn't realize that. And you could see 2.13% short interest of free float. This is the official numbers from the, SEC. I mean, what's there not to like? What's there not to like? Now, over on StockTwits today, sentiment for Tesla is bearish at 40. Yesterday, you were bearish at 32, so still pretty damn bearish. Message volume is now extremely high at 77, and the participation ratio today is normal at 54. You also have some earnings today in after hours. You have Reddit, AppLovin, Robinhood, Dutch Bros, Albert Marley, The Trade Desk, Cisco, MGM Resorts. Tomorrow is going to be an even more exciting day, in my personal opinion. You have Datadog, CyberArk, John Deere, Crocs, Sony, and others in pre-market. In after hours, you have Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Wynn, and Republic Services. Just back to Tesla stock briefly, it looks like we're finding a lot of support here around the 100-day moving average at $336 per share. If we do get any volatility in the next 24 hours via some of the tariff headlines, some of the reciprocal tariff headlines that could come out, that is an area we want to see some support. If we don't find support there, then we're going to head back to that 310 level. In a more worst case scenario, drop to this 200-day moving average. Although, I called for a bounce and I said Tesla was likely to bounce soon. I said that yesterday. It's bouncing today about 5%. It doesn't mean we're just going to skyrocket back to new all-time highs, right? You're still in a downtrend as of right now. So really the next couple of days will be important to see what happens next. And really, we have to get up to the 377 level and then break that to the upside to have any kind of, uptrend that could be starting again, right? That'd be breaking above your prior levels of support, which could now be resistance. And then ultimately you got to break out above your 20-day moving average at 391 and your 50-day moving average at about 402 before you get really confident at all of a breakout to new all-time highs or something along those lines. So definitely not out of the danger zone as of now, but the initial 5% bounce on record low short interest, it looks very good to me. So let me know what you guys think about this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.